Let's shift focus to festival demand and some personal finance questions related to that. Harshvardhan Roongta of Roongta Securities joins us. Harsh, the festive season is here and a lot of gold buying will be on the cards. Which is, according to you, the best way for people to buy and store gold? This is, of course, over and above jewelry.
Well, Lata, see, primarily there are about 4 ways in which you can buy and own gold. Now, first one is obviously the physical gold, which is in the form of coins that we've been all doing all this while. Now, there are certain constraints that come along with this, buying of physical gold. Now, one is that, there is a purity issues most of the times. There is pricing concerns because we have different prices being offered by all different vendors. Because there is a coin making charge and the profit margins of each vendor is going to differ. So this has been the the earlier method of owning gold. Now we have seen that there are new products available in the form of one of the other forms is a gold ETF, the exchange traded fund. Now these are listed on the stock exchanges and they need to be bought through a broker. Now there are certain advantages of investing in gold through the ETF form. One, there is absolutely absolute surety about the purity of gold that you would be getting. The pricing is more transparent. There is no coin making charges. The only cost associated with this is the brokerage that you will be paying to your broker. The third benefit is that the taxation perspective. If you hold gold for more than 1 year in ETF form, you get the benefits of long-term capital gains. Against a physical gold, you need to hold it for about 3 years to get the preferred tax rate. When you sell back gold in the ETF form, you get a better price than what you will be getting from your jeweler or from the bank. Most of the banks who have sold it to you don't even buy back the gold coins. And lastly, because they are into electronic form, it's just the way you're owning shares. These are also in an electronic form, so there is no storage issues, no worries about it getting lost or misplaced. The third method is a gold fund. These are offered by mutual funds. It's basically to assist people who do not have a demat account or do not want to get into the hassles of opening a separate demat account or anything of this sort. Like you invest in regular mutual funds, you give your money to a fund, a gold fund, and which further invests into the gold ETFs. So all other benefits remain the same, just that there is a 2-layer. So there is a cost associated with this, which is about a 1%. The final way is an e-gold. E-golds are listed on National Spot Exchange, and you have to have a separate commodities demat account for this. And you can physically convert this electronic gold into physical mode if you have an e-gold under the National Spot Exchange. Taxation's perspective, it is the same and at par with physical gold. So you need to hold on for at least 3 years to get the preferred tax rate for the capital gains, long-term capital gains.
Okay, so ETF would be the preferred mode, is what you're saying?
Absolutely, ETF is the most efficient manner. Just that you don't get don't get the gold in your own hand. So that's the only disadvantage, if at all. Otherwise, ETF is the most efficient manner of holding gold.
But we'll stay with Harshvardhan Roongta and start addressing all our viewer queries. Sharmila Narang calls in from Bhuvali. Hi, Sharmila.
Hello.
Hello. Can you tell us your question?
My question is that normally on Diwali we gift gold coins or some small amount to friends and close family. I wanted to know if we could gift that electronically as well, and if we can we do it in their name, and what are the tax implications?
Harsh, what would the answer be?
Well, Sharmila, if you are looking to gift gold, especially on occasions like Diwali, I would suggest you stick to physical gold in spite of the benefits that we've just discussed about electronic gold. The reason is, there's a touch and feel element to this gifting part. Now, you really don't want to gift and, you meet a relative of yours and you don't want to really hand over a demat instruction slip to the person saying that I've transferred X amount of gold in your account. So the entire feel of gifting is lost. However, to answer your query, you can do this, just that, KYC norms of stock exchanges will not permit you to do transaction in third-party names. So you will have to first buy it in your name and then transfer those gold into the account of the relative that you want to give to. Regarding taxation perspective, if you are giving to a relative who's defined under the Income Tax Act, then any amount of gold that you transfer to them is not going to be taxable in the hands of the recipient. However, if you're giving to a person who's not defined as a relative under the Income Tax Act, then there is a limit of 50,000 rupees per year. So any amount beyond that will be taxed in the hands of the person you're gifting it to. However, as I've suggested, the choice is yours. But if you're looking to invest for your own self in the future, electronic gold would be more feasible. Gifting purposes, especially on Diwali, I would suggest stick to physical gold. There is the essence of gifting.
Well, I wouldn't quite agree with that, Harsh. The touch and feel of money is always better. So if it is more money, if it is transferred in ETF form, that would perhaps be also a preferred option. Anyway, thanks a lot for joining us with those answers. It's yet another PF show tomorrow at the same time.